Welcome. In this video will ZBCN coin bullish wave come. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the in-depth technical analysis conducted on the market's long-term movements, it is observed that a highly notable phase has been reached within the framework of Elliott wave theory. When evaluating the current structure of the price, it is identified that it is within the fourth wave of a large-scale Elliott cycle. Elliott analyses that span such broad timeframes provide not only short-term directional predictions, but also offer an extremely valuable perspective for understanding major trend reversals and anticipating potential future opportunities. A structure like the fourth wave holds special importance within this cycle, as it typically represents the final rest or consolidation phase before the fifth and final wave that defines the direction and character of the price. In Elliott theory, the impulsive structure is accepted to consist of 5 main waves: 1, 2, 3, 4, and 5. Among these, the third wave is typically regarded as the strongest and most voluminous bullish phase, while the fourth wave represents the corrective and consolidative phase that follows. The current fourth wave fits this description perfectly, reflecting a transitional period in which the market is taking a breather after a sharp upward move. This wave usually unfolds in a horizontal, corrective manner that takes time but is not aggressive. That is, it forms a directionally complex structure, but remains calm in terms of volume and volatility. Although this phase may appear inactive to investors, it is in fact a highly strategic and preparatory stage, because the fifth wave that follows the fourth often represents the final major upward move of the prior trend. Therefore, correctly interpreting the price action within the fourth wave helps to more accurately understand the timing and targets of the fifth wave. A similar structure is evident in the current analysis. After a strong third wave rally, the price has entered a sideways and time-extended structure, which is a characteristic feature of the fourth wave. The fourth wave typically presents itself in formations such as flat, zigzag, or triangle. In these corrective structures, the price does not usually exhibit sharp declines. Rather, it moves sideways and matures over time. During this phase, there is often indecision among investors. The calm nature of the market after a significant prior rally creates uncertainty in investor psychology. However, this uncertainty actually signals that the market is recharging and consolidating in preparation for a new trend. That is precisely why it is important for investors to remain patient, avoid panic, and wait for the structure to complete during the fourth wave. At present, the sideways and consolidative structure the price is in likely indicates the final stages of the fourth wave. A technical examination reveals that the declining momentum is weakening, the price is tightening within a range, and volatility is contracting. This is a technical signal suggesting that the market is making its final preparations before the fifth wave. Especially if the price continues to oscillate between certain support and resistance levels and eventually builds a base, this bottoming process may be a precursor to an upward breakout. The transition into the fifth wave generally does not occur abruptly or sharply. Rather, as the fourth wave matures and market participants complete their preparations, the price gradually begins to gain upward momentum. These movements may initially be cautious and measured. However, during this process, especially if trendline breaks occur, triangle patterns break to the upside, or lower highs and higher lows begin to form clearly, it could serve as confirmation that the fifth wave has officially begun. If the price breaks out of this sideways structure and begins to rise, the fifth wave typically surpasses previous peak levels and initiates a new rally in the market. But we cannot base analysis solely on the Elliott wave, so let's also look at other metrics. Stay tuned. When the chart is carefully examined, it is clearly observed that price movements have been progressing within a well-defined downward channel formation over a specific time period. This structure is referred to in technical analysis as a falling channel or descending parallel channel, and it often indicates that the market is in a controlled correction phase. Such formations create a dynamic band system in which price is pressured from above by a resistance line and supported from below by a support line. Price movements within these two lines show that a certain rhythm or cycle dominates the market, and that investor psychology is operating within a balanced state. In this descending channel structure, the price is moving downward at a noticeable slope. But this movement is not occurring as a sharp collapse. It is taking place in a more controlled and technically bounded manner. This is a strong indication that the decline may be just a temporary corrective move. In other words, the market may still be in an overall uptrend, and this channel could represent a period of consolidation. Especially on long-term charts, such structures are considered transitional phases where price is gathering momentum and forming a setup for a new upward movement. A particularly notable aspect of this channel formation is that the price has tested the midline, which runs through the center of the channel several times. In technical analysis, the midline is considered the symmetrical axis of the channel and holds critical importance in determining the direction of price. The price has challenged this area to the upside, but has not yet managed to decisively break through it. This suggests that buyers have not yet gathered enough strength, but the pressure is gradually building. The fact that price has tested the midline multiple times but pulled back each time indicates that this level is currently acting as a strong dynamic resistance in the short term. However, in technical analysis, the more a level is tested, the greater the likelihood of a breakout. During these tests, sellers typically weaken while buyers gain strength. That is exactly what appears to be happening now. Although price has pulled back after each contact with the midline, each pullback has been shallower than the last, indicating that upward pressure is increasing and a breakout may be near. If the price manages to break above the midline with strong volume and conviction, this should not be viewed as just a minor technical development. Rather, it should be seen as a structural shift that could impact the entire falling channel formation. A breakout above the midline signals that the price is changing direction within the channel and is now targeting higher levels. Such breakouts often lead to rapid price movements. This is because once the midline is breached, buyers gain confidence, while sellers may exit the market by closing their positions. This imbalance in supply and demand can cause price to move upward quickly. From this point on, the expected technical scenario becomes quite clear. Once the price breaks above the midline, it can rise relatively freely toward the upper boundary of the channel. Since the price has not previously encountered resistance in this area and has mostly remained in the lower half of the channel, this gap up to the upper band provides a favorable technical foundation for a faster and more stable upward move. Additionally, when viewed theoretically, such descending channel structures typically involve the price rebounding from the lower band, reaching the midline, pausing there, and, if a breakout occurs, rising to the upper band. This structure is also known in technical analysis as the symmetrical wave theory within a channel, and it has been observed to work quite frequently. Therefore, if the price surpasses the midline, reaching the upper band is not only possible but also statistically a highly probable scenario. When we analyze the technical outlook of the market in detail, we see that the MACD indicator is approaching a critical point. This indicator is one of the most preferred tools in momentum analysis, providing traders with reliable signals about trend reversals. Currently, the MACD is approaching an upside crossover with strong potential. Such structures are often regarded as a harbinger of a new trend rising from the depths of the market. MACD is an indicator that analyzes the proximity and distance of two moving average lines. By taking the difference between these two lines, the fast EMA, usually 12 period, and the slow EMA, usually 26 period, the MACD line is created. This line is then interpreted together with the 9-period signal line. In the current analysis, these two lines are quite close to each other. In particular, the MACD line is approaching the signal line from the bottom up, indicating that the short-term momentum is gaining momentum and the market is preparing to change direction. The most important feature of such crossovers is that they can signal before the price action. That is, an upside crossover on the MACD can alert us before an upward movement starts on the price chart. This gives traders the opportunity to reconsider their positions, act early, and act with lower risk. We should wait for the MACD cross. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.